small.
Hi there, good afternoon. You've tuned into Market Fatafat with me, Shail D'Souza. Along with me, I have Vinny Motiwala. And what a day, Vinny, for you to wear green, because that's something that you are unable to see on the screen, isn't it?
Very really, that's the only day, the only green that is there. Maybe today we may see in most of our stocks that we may take is only going to be the dress color of mine, but otherwise red everywhere.
Exactly, red everywhere, and that's reflecting on your screen right now. Let's take a look at what Nifty is doing. Like I mentioned, at the day's lowest point or a little bit off the day's lowest point coming in for the markets, be it the broader markets or the benchmark indices. But the carnage has been very steep, very painful when you talk about the small cap index in particular, because that one has seen a sharp downtick over the last few trading sessions itself. You've seen the broader markets under pressure. In fact, the small cap index is trading below is 50 DMA as well as 100 DMA. For now, it's holding above that 200 DMA for that. And one of the stocks that I like to mention in the small cap index, it has to be Intellect Design, because while all of the stocks on the small cap index are actually declining in trade today, it is Intellect Design that is holding on to gains, and
twinning with me. Finally, there's something twinning with me.
Exactly. So that's the only one that's twinning with Vinny. But Vinny, the stock actually, you will be amazed to know that it hit an all-time high today on an intraday basis. So it's the only stock that's in the green in the small cap space, and that too at a record high level. But apart from that, let's take a look at what the rest of the market is doing. The advanced decline ratio, no point in guessing the fact that it is very much skewed in the favor of the declines as we speak. NSE advanced decline ratio, 2,162 stocks are declining, Winnie, as against 124 stocks that are gaining in trade. Apart from that, let's take a look at what the sectoral performers are doing. And ITC, remember everyone only spoke about ITC 2 years ago. Today, that's the only stock that is actually keeping FMCG index afloat in trade today. 5% uptick for ITC. FMCG index is the only index, or only sectoral index that is in the positive territory, though it's given up all of its morning's gains. While talking about the losing end, is a realty index that's down about 4%. You have media index down 4%. Energy index down about 3.5%. Also, metal index is seeing sharp gash. So yes, Vinny, over the last 5 trading sessions, if you look at it, PSU is the only, all the PSU stocks actually have been falling. So not a great day today for the markets, and definitely it's not been a great week either for the broader markets.
Absolutely not a great week for the broader markets as well. Nothing exciting that has happened, but you know, we do have a lot of regulators, experts who are talking as well during this week, today itself as well, that we are seeing. And experts, regulators, bankers are trimming in on the concerns of how frothy the broader market has been. So this is a discussion that they've continued as well. And the SEBI chairperson herself also said that they are seeing pockets of froth, while CA flags of short-term euphoria. Even Uday Kotak adds that they have seen enough checks and balances need to keep the bubble away and keep a check on that bubble that we're seeing as well. So listen into what all they had to say as well.
Some people call it a bubble, some may call it froth. The question is, it may not be appropriate to allow that bubble to keep building, because if it keeps building, then when it bursts, because a bubble will burst, by definition bubbles burst. So when they burst, they impact the investors adversely. That's not a good thing. So what should the industry and each of the mutual funds do proactively to not keep fueling the bubble? So this is not an area where we will mandate somebody to do something. What we have said is, this is an area of concern. Each mutual fund has trustees who are looking out for the interest of the investors. They should sit down and formulate a policy. Price manipulation, both at the IPO level and at the trading level, we are working, to evidence that we do see the signs. We, as I've mentioned earlier in a press meet, that we have the technology to do it, so we are able to see certain patterns.
Right now, what we have, both in terms of mindsets and in terms of public reactions, there is a certain adversarial attitude that we adopt vis-a-vis regulators. Yes, there can always be a dialogue, discussion, differences with respect to specific measures. But the underlying focus that the regulators have, which is to ensure that we stay stronger for longer, rather than get caught up in the immediate euphoria of our growth rates and market valuations, and also try to make instant profits, and that is what the rising exposure of even small investors in the F&O segment signal to me, and that is a worry. Because we don't want to go through boom and bust cycles again and again and again.
We have seen a phenomenal growth on the futures, options, and I think a lot has been talked about that. Believe at this stage, we are nowhere near that risk. And there are enough checks and balances in our system today to compare ourselves in serious bubble territory. There may be early froth, as if I can use the phrase from what you said a few days ago, but I would say that it is still froth, little bubbly, but not out of control. That's my personal view. But as long as we keep a watch and manage it well, we can create a sustained capital formation going forward.
Right, so that is the regulator, policymaker, as well as a banker actually talking about what's exactly happening in the markets. And let's not forget, one of the reasons why also you may have seen that fall in the broader markets, Vinny, is the fact that the stress test of mutual funds on small and mid-cap funds, as directed by SEBI, will be disclosed from March 15th onwards. So something to watch out for, and it will be done on a monthly basis on the 15th of every month. But with that, actually, let's kickstart with this episode of Market Fatafat. Let's bring on board our team of researchers and the technical analysts. We have Dhwani Patel joining us on the technicals today, and on the research front, we have Ankita as well as Ashesha who's joining us. Very good afternoon to all three of you. Looks like it's a power girls theme show right now, isn't it?
Absolutely. Celebrating Women's Day every day, then why not, right?
Absolutely. So let's talk about the first stock that we have in focus, and that is BSE. Remember, yesterday BSE saw a sharp knock of approximately 6 to 7% while we were doing the show. In fact, today the stock actually opened with an uptick of as much as 4% or so. It was on track to snap a 3-day losing streak, but that doesn't seem to be the case now. It is down for a fourth consecutive session. But the reason why BSE opened in the positive territory before this sort of a correction came about is because Jefferies has come out with a note where they're saying that the NSE's transaction charge cut by 1% on cash and derivatives is a part of a periodic exercise, and smaller quantum signals limited appetite to engage in price war. What they're saying is that BSE's product pricing and plans to monetize new products will likely be unaffected. The projects have jumped about 2.6 times, projects about 2.6 times jump in the earnings through FY 24-26. They've maintained a buy stance as Jefferies on BSE with a target of around 3,000 rupees per share. So that was one of the reasons why BSE opened up with a gap up. No doubt it's under pressure right now, Vinny.
Absolutely, but I think we also managed to speak to the NSE MD and CEO Ashish Chauhan as well, and he's highlighting in terms of small investors who do not have the capacity to manage higher level risk should actually either shouldn't enter riskier parts of the financial markets, and that's the word coming in. But listen in what more he had to say.
Cannot allow people to commit suicide even if they want to, right? That is why we must ensure that small people who are not able to take those risks should not come into this market. Keep very high lot size and high net worth ability to handle the risk as high. Then if SMEs are more riskier than equities, then keep high lot size, not extremely high, but high lot size. So I'm giving you a framework. Similarly, equities, which are not that risky, and then bonds. Some of them would be risky, some of them would not be. REITs. And so for me, you need to create a regulatory framework which is basically that guardrail based, but not everyone can come and do everything. It is like...
All right, so that is NSE MD and CEO. They all were actually talking at the similar forum today. But let's move on then, Dhwani, and let's talk about Tech Mahindra. In the morning when we are trying to find a bright spot in the market, apart from FMCG, it was IT index also trying to hold on to some sort of gains, but now that one also has fizzled off. Tech Mahindra, if you look at it, this one also has gone through a little bit of a rough patch, isn't it, after it saw a spectacular rise. What's your take coming in on Tech Mahindra from here on?
So the fall that we've seen in Tech Mahindra coming in after the highs that it made around 1340 levels. After that, we've constantly moved down into a lower territory where we are making a formation of a lower high and a lower low. From current levels also, we saw certain resistance coming in at 1300, which was a swing high as well. And I'm expecting further bearish moves on this particular counter to continue down on the lower level till 1220. So for me, Tech Mahindra is a sell from current levels for a target of 1220, keeping a stop loss at 1300.
Okay, keeping an eye out on Tech Mahindra, those levels over there as well. But on that note, let's just slip into a very short break, viewers. Don't go anywhere. We'll be back with more stocks after the break.
Welcome back. You're watching Market Fatafat on ET now. Let's continue taking through the stocks that our technical analysts are picking out. And Dhwani, coming to you, let's talk about Kotak Mahindra Bank and how is this one looking on the charts to you, given the fact that the private sector banks have anyways lagged the PSU banks when it comes to making those returns or giving those spectacular stock returns. But Kotak Mahindra Bank, do you think that this one will lead faster than HDFC Bank going ahead?
So it really becomes important to check out charts right now, given the fall on two different time frames. When we are looking up at it on an intraday time frame, we are definitely seeing that in today's session, Kotak Bank is holding high and we are trading near the highs of the day in this particular counter right now. But the overall chart structure on the daily is on the bearish side, so I'm looking up at a sell on rise opportunities in this particular counter. Any move on the higher side which takes the stock to 1760 levels, it's an opportunity to sell over here. On the lower side, the target on in this one is at 1660, and the stop loss that one needs to maintain with every rise on the higher side is of 1790.
Okay, let's keep an eye out on those levels over there. But let's move on and also talk about IT companies. Ashesha, IT was one of those sectors which was managing to hold on to some bit of a green in the morning as well. Yesterday also it was among the top sectoral gainers. Why are we keeping IT stocks in focus today?
Well, yes, it was trying to resist the broader market decline, but unfortunately now this has also slipped into the red. So we have all these counters, TCS, Infosys and TechM declining nearly 1.5% to 2% today. We had some important management commentary that came in from tech majors from the Citi India conference, and that was quite positive. First up, let's talk about TCS, and the management said that FY25 is expected to be better than FY24. Client conversations, they believe, are more optimistic as compared to what they were in the past. Clients are now spending only where there is clear return on investment, and pricing continues to remain stable with slight bit of upward bias. Infosys meanwhile says that demand outlook has not changed over the last couple of months. Environment continues to remain status quo, and mega deals will likely ramp up from the fourth quarter and will gradually improve as we enter into FY25. L&T Tech also sounded very optimistic. Tech Mahindra meanwhile said that industry growth is likely to be in the range of 3 to 5% for FY25. L&T Tech said that they are seeing early signs which indicate that flat to marginal positive budgetary spending is what we could see in FY25. Commentary was quite positive. The sector, in fact, was trying to resist those decline, but unfortunately it has now succumbed to those losses. All these three counters declining in trade as we speak.
Let's move on and talk about Cholamandalam Finance on the charts then. And Dhwani, in the last 1 year, firstly, we've seen an uptick coming in. But specifically, when you look at the last 6 months, 1 month, slight bit of a decline that we have started seeing coming in the stock. So, is it time to actually just get out of this, and book your profits, or maybe hold on to it or re-enter the stock, given that we're seeing a bit of a correction?
Re-entry is just not a question on this particular counter right now, given that the stock has been trying to make a higher high formation, which we've been seeing since 2023 May over here. But then every time we are seeing a new high being made, there is a negative divergence on a broader spectrum over here with the RSI, and with every rise on the price action, we are seeing a decline coming in the RSI over here. So definitely it's time to book in profits over here. The lower side that I see over here on a short-term basis is 1000. Once we break 1000 level, then a further fall over here in this particular counter can be seen till 960. On the higher side, a strong resistance at 1100 is seen over here.
Alright, so that is a take coming in on Chola, but let's move on. Ankita, let's talk about Titagarh Rail. No doubt this particular stock is hammered out of shape today.
Titagarh Rail is in focus today? Well, it is on the back of the fact that the company has launched its second 25T Bullard Pull tug, which is known as Bahubali for the Indian Navy, and the ship is built at the company's facility located in Titagarh at Barakpur. But note that 2 days back, Titagarh Rail had climbed 8% on the back of an order win of 1,900 crore rupees, and since then there is some bit of a profit booking that has been coming in for the last since yesterday. In fact, the stock has been down, and of course it is mirroring what the broader markets are right now. It is knocked down in trade more than 4.5%.
All right, that's Titagarh Rail for you. That is knocked out of the shape. Take a look at what the markets are doing. Take a look at Nifty. In fact, it is testing now that 22,000 mark as we speak. The benchmark indices are at the day's lowest point. So take a look at Nifty. 22,031 is where it is perched at right now, down 1.4%. At 2:30 p.m. we will be covering or have a special coverage on the broader markets carnage.
Absolutely, we will have to talk about that. It's important to talk about that. But on that note, we're going to sip into a very short break. Don't go anywhere. We'll be back with more.